Hi there, this is Tom Lee. I'm the Chief Investment Officer of Fundstrat Capital and the lead portfolio manager for Fundstrat's U.S. Large Cap Granny Shots ETF. This is our update for the week of June 17th. First, let me cover some particulars. As of June 16th, the price of the ETF was $21.68, net asset value of $21.65. And total assets of $1.2 billion. For the past week, Granny Shots gained 0.47% compared to a roughly 1% decline for the S&P, or 123 basis points of relative outperformance. Year-to-date, Granny Shots has outperformed, the S&P 500 by 504 basis points, and since the April lows, has outperformed the S&P by 1,000 basis points. I'm going to start this video with talking about macro because there were two major macro developments. The first is the Genius Act getting passed, and the second is the Fed meeting this past week. As of this writing, the Senate passed the Genius Act, which is going to be positive for digital assets in terms of setting the stage for things like the stablecoin. Now, you may be somewhat familiar with stablecoins because Circle just went public less than a month ago and has gone from $31 to $200 and now has a market cap of $44 billion. Now, I'm not expecting everybody to understand stablecoins, so I might just give you a few minutes on this. First of all, stablecoins were originally created to serve the unbanked community, those that were using crypto for remittances and trading crypto, and they needed a cash equivalent. The stablecoin industry today is about $250 billion of market size. This is going to grow now because of the legislation that just passed, with the largest being Tether at $155 billion, and second is Circle with about $62 billion of total Circle dollars in circulation. Now, stablecoins are actually good for the U.S., and Treasury Secretary Bessent has said this because let me walk you through the U.S. dominance by market. The U.S. dollar is 27% of global GDP. It's 57% of central bank reserves, and it's about 88% of financial market trades. But today, it is basically 100% of stablecoins, meaning as you look at stablecoins, and we start to think about digital assets, dollar dominance is even greater. So I think this is very good for those who want to think about dollar strength. The second thing is, keep in mind, Tether is now the 19th largest holder of U.S. treasuries. They are now larger than Japan, as you can see on this table here. This is from the Treasury tick data. Tether is actually larger than Germany, and I'd say if you combine all stablecoins at 250 billion, it would actually be just under Singapore itself. Additionally, keep in mind that stablecoins are very popular outside the US. For instance, 20% of all stablecoin volume takes place in Singapore, Hong Kong, and Japan. So you can see clearly in Asia, perhaps in countries where there are those in some nations with capital controls like China, may be using stablecoins in these areas. So, but it is important. And from a merchant perspective, stablecoins are attractive because they lower transaction costs. Look at Stripe has roughly half the fees when they use stablecoins. There's no chargeback to merchants, and according to the Kansas City Fed, that's about 6% of merchant revenue volume. And of course, there's about 1 billion for people that have no bank account. And lastly, keep in mind that many millennials and Gen Z view their banking relationship at risk. Now, you might wonder, shouldn't this all be great for Bitcoin? It is, but with a caveat, because there is the threat of the U.S. Military action against Iran. For instance, in Polymarket, those odds now stand at 66% before July. And if you plot Bitcoin and those Polymarket odds, but you have to invert the Polymarket chart, you'll see that they move pretty closely together. And if the risk of U.S. action drops, then Bitcoin should rise. So keep that in mind. It's good for crypto assets, but I guess Bitcoin has to deal with these war risks. Now let's shift gears and talk about the Fed. We had the June FOMC meeting. The Fed took no action, and the market actually initially rallied, but then fell right around 3 o'clock. And that's because Fed Chair Powell said the following. Everybody knows forecasting a meaningful increase in inflation in coming months from tariffs. It will be someone in that chain that I mentioned between the manufacturer, exporter, importer, retailer, somebody putting into a good of some kind, or just the consumer buying it. All through that chain, people will be trying not to be the ones who take up the cost, but ultimately the cost of the tariff has to be paid, and some of it will fall on the consumer. So stocks fell. But here's the thing. The Fed has talked about data dependence in all of their previous FOMC meetings, and now they're taking a forward look at inflation and saying they're not going to cut. This is what I think markets are starting to have a problem with. For instance, look at the media questions. Inflation is cool and is back to 2%. There's an argument for cutting rates immediately. Question. There's an alternative scenario that tariffs would slow growth sufficiently and perhaps put a lid on inflation. Question. Wouldn't it be better to have rates that are neutral as the economy heads into a period of high uncertainty? Another question. You said inflation data is in a good place. When you cut rates in December, and inflation rates were higher. So what makes you feel comfortable cutting then when inflation went higher than it is today and you didn't cut today? And finally, someone straight out said, you spent years talking about how your data depended. Now your decisions are forward-looking. I think in some ways, I think the media and markets are feeling the Fed has pulled a switcheroo here. And but you can see that they did inch up their inflation forecast. This is for 2026, but mildly. And they are expecting roughly one less cut in 2026. But let's face it, inflation is in a good place. This is the May CPI report, and we've talked about it. There was outright deflation in that report, and excluding housing and auto insurance, and even in goods inflation. Inflation is falling like a rock in the US. And look at the one-year break-evens on inflation. The market does not believe there's inflation. Even after today's FOMC meeting, one-year inflation forwards at 2.38% are still below where they were at the start of this year, even after tariffs. And of course, consumers, their expectations around inflation are finally falling, but there's a huge gap between that and actual inflation. In fact, it's the largest gap in 50 years. So we think pullbacks generally are shallow because of these perception gaps. The latest margin debt came out. I thought it was pretty interesting. You know, margin debt has been falling for 3 consecutive months. It rose in May, but you had a 20% rally in that time, and people took money out of the market. In fact, margin debt today at $921 billion is still lower than it was 4 years ago. And if you look at CFTC positioning on speculative longs, it's actually the lowest in more than 12 months. And there's still $7 trillion money market cap on this money market cash on the sidelines. And look, the latest B of A survey shows the US is still the consensus underweight. So this is still the most hated V-shaped rally. Now let's talk about the granny holdings and stock performance of some individual names. If you look at the top 5 performers this past week, Oracle tops that list. They had great earnings. But then if you look at things like CrowdStrike, GE, Renova, KLA, Tencor, and Palantir, they're rising because the AI trade is working. Now, the bottom 5 performers here are Apple, MicroStrategy, which is hurt by Bitcoin, Arista Networks, PayPal, which is hurt by some of the Genius Act moves, and Garmin. Now, in terms of theme performance, the best performing theme is energy and cybersecurity. The style tilt is the second best performing factor. That was helped by Oracle and CrowdStrike. And then global labor suppliers and automation, again, but it's helped by the fact that Oracle is in that granny shot. That's it for now. Thanks for listening, and I'll speak to you soon.
불어날았네 money